Determining the value of the underlying share used in share-based compensation for private companies is inherently difficult due to the lack of marketability of the share. There is no readily determinable fair value for the underlying share, therefore the valuation of the share can be costly and complex. In contrast to a public company where the valuation of their shares is available from multiple sources. We have spent time on this issue because of the FASB's initiative on simplification and in particular for private companies.
The FASB, with significant input from the PCC, has already made a number of simplifications in this area over the past several years. Some of those simplifications are specific to private companies, while others have helped both private and public companies. ASU 2016-09 simplified various aspects of the accounting for share-based payment awards to employees. ASU 2018-07 extended these simplifications and the rest of the employee model to the accounting for awards to consultants, vendors, and other non-employees. The previous separate non-employee accounting model had been far more complex.
The PCC, working with the FASB, is now trying to simplify one final key input to valuing share-based payment awards for private companies by providing a practical expedient that some stakeholders believe could reduce costs. The expedient would allow a private company to better leverage what it does for tax purposes in valuing the underlying share on the grant date for GAAP purposes.
The next steps for the private company practical expedient for share-based compensation is to issue an exposure draft in 2020. We just recently voted on that at our last PCC meeting in December. There are other areas where share-based compensation for private companies could also be simplified, such as profits interest awards. There's not a lot of specific guidance, and so we look forward to talking about that with the board in the future.